What is going on, everyone? Welcome to episode one of this series. Okay, so I'm going to be doing a series, and in this series, I'm going to be showing you how I look at the market, what I'm always looking for, the trades you must maximize on, and a whole lot of value. And I believe that this series and this episode are going to be game changers in your trading journey and career. So expect to get a ton of value from this. So guys, remember to like and to subscribe to this channel. Remember to turn on the notification bell so that you don't miss out in the next video that we are going to upload, so you don't miss out the next episode. All right, so without wasting time, let's jump straight into it. Okay, so normally there are things that I'm always looking for. For example, if the market is going up, all right, so I'm looking for a correction. Okay, I'm looking for a correction, and then a what? Then a continuation. Okay, all right. Let me delete that and do that again. So impulse move. So I'm looking for correction, then continuation. So these are actually trades that I'm always looking for. And if the market is trending to the upside, then I see this kind of a structure, then I'm looking for myself. This is a sign of reversals to me, and I'm looking for sells to the downside. Okay. Then also the opposite is also true. Okay, the opposite is also true. Let's assume I'm looking at sell. So impulse move. The moment I see this, I'm looking for a continuation to there. So this become an impulse move correction, and then continuation. The same thing. The market is impulsing to the downside, then it starts trending to the downside like this. Then I'm looking for what? I'm looking for a reversal to the upside. So these are the things I'm always trading for. So remember, the theme and what we normally say with our trading is simple and unique approach. So there are only like four things you're looking out for, you know, in your trading journey. We are not looking for many things. We're looking for very few things, in our trading journey. Okay, so let's look at this. Let me delete this quickly. So, and then in this odd CHF, I'm looking at odd CHF. There's a trade that I'm already in as at now. So that's the reason why I don't delete this. I'm going to show you that. So remember, guys, one quality trade is more. One quality trade, to me, I prefer one quality trade more than 100 chopping ones that you're not sure. So one trade, you maximize on it, you scale in, you can kill a lot. You don't have to trade a million things. You can just catch one move, scale in, trade it nicely, get a very good percentage return of investment, whatever you have invested, and move on and kill this thing. All right. So I'm on odd CHF. This is a weekly time frame. So you can see that on odd CHF, there's an impulse move, there's a correction. So I'm actually expecting a move to the upside, at least to this level. Then maybe it give us a double top. Then before I see a move to the before I see a move to the downside. Okay, so that is the reason why in this particular trade, if I was in this level, then this is what I'll be looking out for. So let's go to the daily time frame. So from the daily time frame, you can see it clearly. All right, so you can see impulse move, then you see correction, then we're expecting a move to the upside. Okay, so let's go. So let me draw here. So I'll come here and put my line over there. Okay, because this market could easily come to this level over here before we see a push to the downside. All right. Okay, so let's go to the 4-hour time frame. So on the 4-hour time frame, you can see that we already came from here. So this become my recent one, my recent high, and that is what I'll be looking for. And then maybe this becomes my recent low. Okay, all right. Let me just draw this, either this one or this one. It depends with how you want to look at it. So let's play this and see how it goes. So it goes, let me increase this. So you see that market goes all the way to the upside, then it starts to do that, then it comes. Now, this is on the 4-hour time frame. So you can see that what I was saying is that based on my this recent high, the market came close to that. Let me delete this, that doesn't confuse you. So you can see that the market came close. So there are several ways that the market will do. The market can come all the way here, okay, and then turn back, or market could come and break and form this and catch people on the wrong side of the market, then come down, okay? Because, for example, if you're trading support and resistance, you can see, you put that, okay? Most times, you see that the market has broken and retest, and then it's continued to go up. But we are actually we are looking for this type of setup, because for us, these are game changers. We know that you are coming to see a push, a very strong push to the downside. Okay, so remember, we trade market structure, and for us, market structure is what? Market structure is key. So let's go to the 1 hour time frame. And I want to show you something. Now, there is some things you must know. How did the market? Let's assume that this is my line. Okay, this is actually here, my recent high. So there are 4 ways. There are actually 3 ways. So the market can come to the top here impulsively, then go back. Okay, the market could come here correctively. Okay, so the market will come in correctively like that before it goes back. And then another way the market will come here is the market will come here by giving us what? The market will give us, the market can give us, a structure before we seeing that, before we see that. Okay, so these are how you must always ask yourself, how did the market approach this level? Was it impulsively? Was it correctively? Or did the market actually give us a structure? You see an impulse move, correction, impulse move, correction, then impulse move. Then how did the market approach that level? So those becomes key questions that you must always ask yourself, looking at the market. And also based on that, there is something we are looking for. So assuming the market approached the level impulsively, sorry. So if it came, because it's either an impulse move or a correction. So if the market came impulsively like that, okay. So what I'm looking for is a correction. Then I am looking for a flag, okay, before now I can what? I can enter this trade. So this becomes my what? This becomes my confirmation. All right. So for example, now if you look at what is currently happening here, you can see that that is basically what happened. Look at this. The market came very strong. From here we see a very strong impulse move. Then we see a correction. Then look at this. We see a what? We see a what? We see a what? A flag. Then a push to the downside. Okay, so let's go to the 15. So normally you can take the 1 hour, the H1 flags, or you can take the what? The M15 flags. Depends with how you wanna look at it, and depending on how you want to approach it. And then something else is this: where did the move start from? The move started from down here. The move started from down here. Okay, I know most times we will be looking for trades up to this level. Then you're looking for buys. Then the market does this. Then the market continues goes down. Then you're wondering what actually happened. That is why market structure. What is the structure telling you? Look at this structure. This is actually a sell structure. As the move goes to the upside, I'm actually expecting this move to come all the way up to here. And that's why we have what you call what? The 90% rule. So the market could come all the way either to this level or maybe even close here before we see a move back up, up there, right? So now look at this. So let's go to the 15 minutes time frame. Okay, then let's play this out, or maybe let's stay on the 1 hour first. Then we are going to play this out and see how this market is going to behave. So let me play that. So the moment I play, so you can see that, so you can see a lot of rejection. Okay, You can see there's a lot of rejection here. So if you go to the 15 minutes time frame, this is quite interesting. And this is what I said. If you go to the 15 minutes time frame, then you can see that there is a structure that has formed over here. Okay, there's a structure that has formed over here. So you see an impulse move, then there's just this structure over here. So definitely, if I was to bring this back over there, okay, if I was to bring this back over here, you can take this trade up here, but I would rather want to be involved with this trade here. Maybe I can put my sell stops over there, and then definitely you can see that I'll put my stop loss above here, above this recent high. Remember, this line is a recent high. Then you can see this is a 25 pip stop loss. Then maybe your first target can be on the trend line. You're talking about 2.5%, but my overall move, what I'm targeting is, I'm targeting what? I'm targeting this level to the down here, which is an what? Which is an 8%. Can you imagine what an 8% can do to your account? All right, that's what I'll be looking for. And then let's play this out and see how it goes. So look at that. So the moment it breaks in, it means that it tags us in, because already now it means that we are already in the trade. Then what happens? Look at the move. It continues and goes back, and then it plays out, like that. So let's play this out and see. Okay, let's reduce the speed so that at least it doesn't. And look at how it breaks. It just comes and breaks. So if you are you are support and resistance trader, maybe you had to put here, I know, as you are, this is the recent support and you're supported here. Now you're expecting, look at how it just breaks through and goes. And if I go back to the 1 hour time frame, okay, look at this. So you see there are multiple entries. So let's assume you took this. This was your first entry. You're targeting 8%. Then also on the 1 hour time frame, look at this flag over here. There's a flag that formed over here. Okay, do you see the flag? Yes, there's a flag over there. Okay, so the moment we got here, and then remember I told you we came in impulsively. We came in impulsively. So I'm looking for either rejection going down, then I'm looking for a flag. Okay, let me even just remove this. I'm looking for a flag. Okay, and then the candlestick must not be less than 6 to 8. I mean, that is 6 to 8 hours. So you're talking about 1, 2, 3, 4, 5, 6, 7, 8, 9 hours. Okay, then what are you going to do? Put your sell stop over there, then look at my stop loss somewhere around there. I mean, around 40 pips, 39 pips, not bad. Okay, then what is my target? Again, my target is all the way to the downside over here. So we have so already we are in a trade of which we are targeting 8%. Then we have added another trade, which we are targeting 4.8, almost 5%. And remember, we are risking 1% to make this 8%. We are here, we're also risking 1% to make 4.8. So that's 8, and for those are 12%, risking 2% of your account to make 12% of your account. Then let's look at that. It just breaks in and goes on and on and on and on and on. And then look at that. What happens? It gives us a what? It gives us another beautiful flag. Okay, beautiful flag over here. So remember, once you see this, the moment I enter my trade here, then I see a structure and the structure is broken. That is the time I adjust my stop loss to break even. Okay, you don't want to adjust your stop loss to break even very fast, then you're tagged in and tagged out. Okay, so you see that here, once I saw this structure and it was broken, then this first trade over here, I will adjust my stop loss to break even. Then once I'm in this trade, I'm waiting to see another structure. Once this structure is broken, then I'll adjust this stop loss to break even. Then what it means is that I can now add more trade, because these two becomes risk entries. Okay, they become free. They are all on break even. So let's assume that maybe even you took a 40 pips stop, 40, 35. It depends with how you look at the market. Okay, and whatever you are looking for and risking. So let's assume you took a 40 pip stop loss, then you are adding to the 12%, you are adding a 3.6%. Okay, so let's see how this is going to play out. So let's play that and see. Then you're tagging. Look at that. You're tagging, you're tagged in, you're tagging, you're tagging. Then it's giving us another structure. Oh my goodness, this is too much, right? So you see, the moment it ended, if you had adjusted your stop loss, the moment it was you are tagged in. If you had adjusted your stop loss immediately, then you can see that you are tagged out by this move. So wait for a structure to form. Look at this. This is another structure that is forming. Okay, and then once it is broken, then you can what? You can adjust your stop loss. All right. So you see here that this is another structure that is forming, of which it has already been broken. Okay, so you can scale in more scale ins, right? Then we are looking at, let's say we are looking at because of this previous high over here, so maybe we are looking at 37, 38, 39, 38.7 stop loss. Then of course we are still targeting this level at 3.3%, and then look at how it goes. It plays and continues and goes down. Look at that. This is interesting. Look at that. You see another opportunity. So many opportunities without even trading a lot of pairs. One pair can give you a lot. Look at this trade. Yeah, look at this trade over here. All right, already is in profits because it's here. Look at this trade over here is in profits. Look at this trade over here is in profit. This trade over here is in profit. Here there is also another opportunity. Okay, there's another opportunity, and remember, you can scale in because you're not afraid. All these other trades, they are on break even, so you're not afraid. Even if the market goes back, at least you're going to bag something. Okay, so you see, let's say even assume you decide to take this one. Okay, then you're targeting a 2.8%, which is still not bad. All right, what happens? What happens to the market? It breaks and continues and continues and goes down and goes down, and then look at that. Our setup is complete. Okay, let's see if it actually went up from that. You can see that the market is actually giving us the market is giving us another bigger flag, of which this one I will not trade this because I'm actually, I'm actually nearing or gotten to the where the impulse move corrected started from. So there's a high chance that the market might go down or might go up. But I will not be interested in this trade over here. Rather, when I see this, then I'll close all my positions, and let's see how this played out actually, if it actually completed our setup, or how did it play out. So you can see that once it it reached here. Okay, okay, so you can see, so this was actually a bigger correction, of which you see that the market still broke this. It was actually a bigger correction, of which, well, you could have entered here, but as I said, once I got here, I could have either closed all these trades, because I don't want this market. It has actually come more than 90% to this level over here, so 100. So it could easily go back and go back all the way to the upside. So look at that. That's an 8%. Then you add 4.8, almost 13%. Then you add 3.6%, almost 60%. Then you add what? You add 3.3, then you add 2.8. We're talking about more than 20 something percent just by maximizing one trade. Okay, one pair, I mean, all CHF. You're maximizing, you're always looking for these. And then the secret to break even, I see many people, you move into break even very fast, and that's the reason why the market normally tags you in and tags you out, is because once the market moves, you adjust the stop loss to break even without first of all seeing a structure like this that has been broken. So the moment you're tagging, wait for a structure let the structure be broken, then move your stop loss to break even. Then once you enter here, wait for another structure, it is broken. All right, once it is broke, once you see this is broken, then you move to break even so that you avoid being tagged in and tagged out. This thing is so powerful. All right, so this is a lot of percent. We are talking about almost 25%. This is 8 plus 4, 4.8 is 5, 13 plus 3.6, which is around maybe 17, plus 3, which is 20, plus 2. We are talking about almost 23% just by maximizing on one trade by trading the market structure. This is so powerful, guys. This is just part one. I'm going to share with you. This was a sell. I'm going to share with you buys. I'm going to share with you reversals. You know what I'm looking for. For me, market structure is king, guys. Market structure is king. This is what I trade. I know there are people who trade support and resistance. There are people who trade candlestick patterns. For me, candlestick patterns is secondary. Market structure is what? Market structure is primary and is king for me, guys. So, guys, before I end this episode, I want to show you a trade that I'm currently in right now. Okay, so let me just exit this. Let me show you, and it is actually this trade over here. Okay, so maybe let's clear all this so that you know the charts are clean. You know, I don't like dirty charts, and you can, as you have seen, I don't use any indicators. I don't use any of those things. I used to use them, but now I only trade what? I only trade market structure. All right, this is beautiful and this is amazing. So if I go to the 4-hour time frame, so you can see here there was actually this move over here. There was this move to the downside over there. Okay, and then if I clone this, bring this over here, so definitely there was that. You can see that it was actually the move to the downside, and then I saw this structure over here. Okay, the market was moving to the upside like that, so I drew my trend lines like this. Okay, so I normally what I do is that I adjust. There's what you call pattern separation, so that you're not confused with the lines. So this one is there, then this one is over here, so that it is clear. It's clear that this is a move to the downside. Definitely, I'm expecting a move to the upside because these are actually a sell structure. So now, what happened over here? Let me go to the 1-hour time frame. So on the 1-hour time frame, sorry for that. So there was actually this move. You can see the move is becoming more clear. I don't know if you can see that. So this is a move that is moving on like this. It was very clear. It was actually a clear move over there. And then there was also this structure over here. Look at this impulse move correction, impulse move correction. So this for me was a sell structure. Okay. And then definitely I missed something. And what did I miss? Once I got up here, okay, I moved this, so I actually found it when it was playing this, so I separated this a bit. All right, that was a mistake. Let me take this back there. All right, okay, so I separated this a bit like this. Okay, then look at this. Immediately, there was this impulse. It was correctively, right? Impulse move correction, impulse move correction, impulse move correction, impulse move. Then what did I say when I see this? Whether it is an impulse move or whether it moves impulsively or impulsively or it moves correctively, I'm looking for rejection and then I'm looking for a flag. And what happened after this? There was this flag over here. Then I put my line here because this was my recent high. I put my trend, my line over here because this market could have come all the way and broken. Okay, this market had the possibility of coming all the way and break. Okay, Let's push this on the side a bit. Okay, so this market could easily, come all the way here and break. And this is one of the secret I'm going to share with you in the next episode. Break here, catch people on the wrong side thinking it's continuing to buy, then it just goes down, 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 and continue selling. And you're wondering where did I miss that? Okay, so let's play this and see. So you can see that there's a very powerful, flag over there. So what did I do? I put my sell stop down here. Okay, I was targeting that the moment this market breaks and goes down, then I am moving. All right, I'm moving with this trade. And where was I targeting? Look, I'm always targeting where the move started from. Okay, this is what this is where the impulse move started from. I know that this market is going to play all the way to here, or actually it can play 90%. That's where the 90% rule comes in. And this was a 3%. I put my stop loss just above the recent high, which is around 34 pips. Then let's see how this went. So it's actually a trade that I made even now. So you see it came all the way close, never broke. Then look at that. Already by that one candlestick, I was in, tagged me in. Then look at that. Actually, I could have scaled in here, but I was busy doing other things, so I didn't have time. I didn't see this moved, I missed it. So, but you can see that tagged in, and then look at what I was saying. So it moved in. Then if you are too fast on adjusting your stop loss, you just be taken out. And then look at that. Came all the way, actually very close, but you trust your you normally trust your plan. Okay, trade your plan and trust your plan. Look at this. This was a very nice flag that formed over here, of which I could have actually scaled in here, and I didn't get the chance to, because I was doing other things and I was not able to see the trade. And what happened after? So you see, after there was this flag, then there was a break, then there was another flag of which I could have scaled in here, then because I was expecting a move to the downside. And look at that, it broke, then immediately we were in deep profit and another deep profit. So you have taken your take profit one here if you want. Then look at that. Then now it came all the way to there. Where are we now? That is where the market is currently running at over here. But you can see that even by this came all the way to 90%. Though you are targeting 3%, look at that. That was a clean, how many percent was that? It was a clean 2.28, which is not bad, of which will have maybe to close your trades over there, or you can leave it to play out. Remember, already after this break, we already adjusted our stop loss. Actually, my stop loss on break even. I want to see how this is going to play out, because this could be a flag that is forming over here. Okay, could be a bigger flag that is forming over there before we actually now complete this. Before we complete this setup to the downside all the way. Fine, and who knows, this thing might go all the way. So the moment it breaks this, I might actually be interested. Okay, once it is hit here, my first target is hit, then I'm targeting where? I'm targeting a 7.6, because you can see we are actually on this trend line and it's giving us a flag. So the moment this flag is broken, then we are looking at, what are we looking at? We are looking at this market has the potential of coming all the way and completing this setup of 7.16%. So guys, that is how I normally look at the market. That is normally what I normally trade. So I'm currently on this trade. Let me show you how this trade is playing out as at now. So this is a trade, as you can see, odd CHF, and this is actually the trade. So you can see that our sell was just below here, below the structure. Then we see that there was a very strong impulse move to the downside. Definitely our take profit is here, but remember, if this, for example, is the structure, remember we are targeting this level over here. Once the market has moved up to this level, there are chances that this market could easily go back. So the best thing is to secure, though I have adjusted my stop loss to break even, the best thing is just to secure some of these trades so that you don't find yourself, on the wrong side of because this market could easily go back, before it completes your setup. And you can see, guys, just as I had predicted, you see that we had this descending structure over here. You see that the market went all the way up before now it is coming back to, maybe to come and complete this structure over here. But definitely we already cut our profits. We already took our profits, and then we are just waiting for this to play out. So that is it, guys, on episode 1. More episodes are on the way. Don't miss out. Hit the subscribe button, hit the notification bell so that you don't miss out on our next episode. Like and share. Thank you guys for watching. This is EagleEyeFX signing out.